Welcome back. Well, the rupee has fallen to a fresh low versus the dollar. This fall is despite the fact that India's November trade deficit fell sharply as compared to the record deficit that we saw in the month of October. We have with us senior forex expert K.N. Dey and Kanika Pasricha, who's the chief economic advisor at Union Bank of India, joining in. Mr. Dey as well as Kanika, thank you very much for taking the time out. Mr. Dey, I'm just going to come to you. It has been around a 5.5% depreciation that we've seen this year for the rupee, and we have depreciated much more sharply as compared to, say, the Indonesian rupiah, the Filipino peso. What is your sense in terms of what the key pain point has been for the rupee depreciation, and where do you think we're possibly going to stabilize?
Hi, good afternoon. Well, as you rightly said, the last 6 months rupee has almost depreciated by 5.5%, and the whole year is around 6.5%. And the first villain for this rupee depreciation is it started off when our U.S. president came in from January this year. It started talking about tariffs and putting negatives in the market, confusion. When we saw a lot of FPIs selling this year, if you see from January till December, I think FPI's net inflow is minus $25 billion. And they have been selling almost every month except 2 or 3 months, maybe July, August, or maybe one more month. Otherwise, in every month, FIs have been selling. And as of date, around 2,25,000 crore of rupees has been out from the Indian market, periodically, month-wise. That is one of the biggest negative for the rupee, where we didn't get any inflows in the equity markets. There was some FIs money coming in the bond market for the whole year was something around 8 billion till last month. I believe even that sell-off is started this month also. So there is no actually negative flows. That is the biggest thing for India. Then we have this tariff coming in, and about a couple of months back, and then this penalty, and then a lot of stories coming in the market. We are almost done with the tariff. Everything is done. We will be here or there. But still today, nothing is happening on the tariff. No. And I believe even if tomorrow U.S. reverses the tariff from 50% to even 20 or 25 or 15, whatever it is, I don't feel the rupee would correct back. Because it may be little half 1%, but not to those old levels. I think 88, 89 are history as now.
Oh.
So going forward, that's all history now for me. It looks like that. Because, again, why will RBI has been intervening? They have no fixed rate in the mind. At what rate it's depending upon the market driven rate. We are only trying as a speed breaker to intervene and stop the speed. And today we saw a lifetime high of 0.91 point, I think, 0708. And this would continue. And being a year-end also coming in, and normally in year-end the markets become thin as we go forward. And any thin market, any demand coming in, the volatility also goes high. So this thing will continue for some time. And maybe we could see some stability coming in from the second half of January coming here, where we might see some flows coming in, provided there are some positive things from our side.
Okay, all right. So you do not see it getting back below those 90 levels anytime soon. Kanika, Mr. Dey also mentioned what the RBI is doing. It's not a big policy change or intervention that's coming in from the RBI, right? Do you think it is done because what's your sense first up? Should RBI do something? If yes, what would they be doing? Or is it a fact that this is basically motivating more exports, helping exporters, and this is something that the RBI wants to continue?
So, first of all, thanks a lot for having me on the show. 2 weeks back, rupee was about to hit 90 and I was on the same show. Now in just 2 weeks, we are pulling towards 91 handle. See, it's December. Liquidity is low. FPIs are selling. And as you rightly said, Ekta started the show by stating that fundamentally nothing much has changed in the last 2 weeks. In fact, we've only got a positive data from a fundamental perspective, where trade deficit has narrowed from $41.5 billion to $24.5 billion. So from that perspective, what becomes very important is that rupee fundamentally is unlikely to be at these levels. Overshooting typically happens in December. And the reason for that is low liquidity and the sentiment that's taken a downbeat because of delay in US-India trade deal. Now, last time also had stated this, on a 3-year basis, when we look at a fundamental handle on the currency, it typically depreciates by 3.5% annual average. And on a 3-year basis, that's respected. 2020 to 23, March 20 to 23, rupee depreciated by close to 9%, 3% annual average. Now from 2023 till 25 March, rupee was down by 4.5. So this year we were already forecasting rupee moving towards 89.90. Moves beyond 90 is overshooting in our view. It's in a zone where in December typically such moves happen. RBI is there, always there, compliments to them to handle volatility in the currency. Levels very difficult to predict at this juncture, but we think eventually by March, currency likely to settle back to fundamentally prudent levels, which we think is 90 or below.
Okay, you think 90 or below, maybe by March is what we'll keep an eye out on. Mr. Day, just a quick word. So you said that FPI selling, obviously a big concern coming in there, and this is not coming into the equity markets. Do you think if FPIs start coming back or valuations in the equity market come lower, that's when we'll see the buying coming in, and that's when the rupee will settle further?
Absolutely, because once you create a confidence, something on the FIs where they could start coming back in the equity market, obviously the rupee will go. And obviously then whatever RBI has intervened for last couple of months, they will try to recover the dollars they have sold in. And we had, I think, reserve about $704 or $5 billion a few months back, which has come down. So I personally feel I want the FIs to come back to invest in India. And once they come back, we will, I think RBI may parity the rupee as my other colleague told. Should be around 90 here or there, because we also cannot make the currency too strong enough to support our exporters. At the same time, make it not very volatile to see that it hurts it has to be balanced in a proper way. So I guess, as you said, maybe 90, around 90s, maybe somewhere there, the rupee should stabilize going forward. Hopefully, the FPI starts coming back. As I said earlier also, I don't think the tariff would make a very big difference now, because most of the, except I think the textile exporters have been hit very badly, but I guess they are now readdressing their issues. So I think we need to have some positive things coming out to lure our FIIs to come back to India to put in their money as fast as possible.
Sure. Okay, Mr. Day, as well as Kanika, we've completely run out of time, but the topic does continue as the biggest topic for today's trading session, and not only today, but in the past couple of days. We need to take a short break with the news that the insurance bill has been tabled in the Lok Sabha, and the details of that is flashing on your screen in terms of what the finance minister is saying at this point in time. We'll take a short break. Manisha Gupta will join in next. She has with her David Tate of the World Gold Council. Stay tuned.